Hey guys, what's going on? Paul here, back with our usual Wednesday night Cardano Focus live stream. Today, joined by Paddy as usual. Welcome, Paddy. And AllinCrypto is our guest today to take us through the overall markets and why he likes Cardano and where it's going. So, guys, welcome as usual.
Cheers, Paul. Cheers, Paul. And welcome AllinCrypto. Looking forward to tonight's one. Heavily focused on markets and I'm going to get this out first to get it out of the way. Nothing that we talk about is financial advice. Just in case anybody believes anything we say or takes anything we say as investment sort of opportunities. What do we know? We know as much as everybody else, I guess. But welcome AllinCrypto.
Yeah, thank you very much for having me. Yeah, we don't want anyone coming after us for any bad investment decisions made. So hopefully there won't be any of them tonight. But yeah, no, thanks for having me. A big fan of your channel, Paul, and of course follow you on Twitter, Paddy. So thank you very much. Privileged to be here and looking forward to getting into it with you guys.
No worries. Great to have you in. I follow your channel, and the two channels, Paddy's and AllinCrypto's, are down below. I'd say make sure you follow them. And I think you're putting out a video every day now at this point on the crypto markets, and some days I see even 2 videos coming out. So anyone looking to keep up to date with what's going on in the overall macro side of things as well as just crypto, I definitely recommend checking that out. So getting into it, anyone coming in, please do share it out, give the video a like, comment questions or anything. We'll pull in all the questions as we go, and the more people that come in, the better the conversation we can have. We are going to look at the overall crypto market, and anything you want to turn the conversation towards, let us know in the comments. But AllinCrypto, so give the introduction to yourself, I suppose, and then we'll get into the rest of it, the high level of who you are or why you're here in crypto.
Yeah, so I'm still trying to figure out, I guess, why I'm here in crypto. But no. So I go by AllinCrypto. AllinCrypto was the name of the channel, and I've kind of adopted it as my alias, I guess. So the channel was created right after the sort of March 2020 crash, and we're still here. You know, we've gone through a great bull market, a bear market, and now we're trying to work out sort of where we are generally. But my background's actually in dentistry, so I don't have a cryptographic background. I don't have a financial background. It's rather weirdly in dentistry. But I've been investing in the markets for a long time. Heard about Bitcoin when the kind of Silk Road days were about. So that would have been 2012, 2013. Didn't become a crypto investor really until 2017. I have a very vanilla story. You know, I'm sure we could ask your audience, you know, when did you first get into crypto? And a lot of them would probably say 2017. It's quite a common time, I think, when people got involved in the markets and, of course, stuck around through the bear market. And here I am today, you know, full-time crypto, make my money off of trading and navigating these markets and loving every minute of it. And it's certainly a very challenging environment that we're currently in, which I'm sure we'll get into. So that's me in a nutshell.
Nice. Yeah, it's a good one, actually, for people in the comments. Let us know when you got into crypto, what year or time frame that you got in. It's always good to get a feel for how long people are in there. And so you got into it. So 2017, you got into it. What about Cardano? I know from following your channel, you do lots of videos focused on Cardano as well as the overall picture. But what drew you to Cardano as well and ADA?
I think, and I always get asked this question, you know, what do I like about Cardano? And I think that's evolved over time. You know, my first kind of interaction with Cardano really was just seeing it on CoinMarketCap. I've read books like Into the Ether, which talks about how Ethereum was created. And it didn't paint Charles Hoskinson in a particularly good light. And of course, I think when I kind of realized who Charles was, his connection with Cardano and what Cardano was doing, it was trying to be an Ethereum competitor, but proof of stake in opposition with Ethereum's proof of work. That really drew me in. You know, Ethereum's been a great success. Can this rising star Cardano do so? So initially I got into Cardano from an investment point of view and find myself here, I guess, really just in awe of where I think it's going. You know, we've got all this great stuff taking place. I think Ouroboros is a pretty beautiful consensus mechanism that I think could win out in the long run. You know, I see, and I know we're going to potentially touch on where I see Cardano going. I see Cardano morphing from what it currently is as this kind of layer one that people build on top of to almost becoming like this blockchain that secures other layer one or layer twos and side chains and becomes more of a kind of a security layer for these people to build on top of. And I think that's the world we're moving towards. I think Ethereum is doing a similar thing, but Cardano really got into it in 2018 and never looked back, and initially got into it from an investment point of view. And then kind of from what technical kind of knowledge I have, think that it's going to do very, very well. So still here today. And of course, the community is great. Charles is great, and really excited for the up and coming things.
Okay, nice. Yeah, I like to see that when you're focused on the investing side, but yet you still put a lot of focus into ADA. It's a good sign for me when people are looking at the markets a lot and they're into ADA, because I've been in it a long time now, and obviously come in the beginning looking at where it could go, and why you're in it changes over time. Like, I'm in it for a lot of what it can do and how it can help in the long term, but still price plays a big factor in that. Some people like to say it doesn't matter what the price is. It does matter what the price is, because the price affects what we can all do, how we can grow, how we can educate and stuff like that as well. So it's a factor in it. But Paddy, any questions, or where do you want to go?
No, I think you're right. A lot of people are in it for a lot of multiple reasons, and I do question when people say they're not in it for the price, because the price is very important to the entire ecosystem, and the entire ecosystem can exist without maybe even a stable price if it's not a low price, but we got to have one or the other. So then we would know what we would have. But if the price is going to be standard within crypto, I get it all the time. Why is ADA not doing well? Why is it, not performing well? Why is things, going up and ADA isn't going up? And then it turns around like it happened yesterday. And I was like a psychic. I had sort of sent you a message, Paul. I remember that. It's like, I remember a time when XRP pumped, and then not too long after, it was like 20 minutes later, ADA pumped. And I was like, this seems to be the going trend. And when you're here long enough, you sort of notice these things. But you do need price. And that's what brings people in to purchase and invest and build products. But I do like that point, all in on the future of Cardano being could you call it a blockchain for blockchains in terms of, and define them as side chains or L2s and everything else of the sort, where it really is a security layer. I like that idea. And I think it's probably, you could be exactly right on where it's going. I feel as if it's been going that way, and I feel as if that's the model where you don't need everything to run on the layer one. Now, the problem's going to be is getting people to use a potential layer two. I don't think many people like side chains. So it's going to be interesting to see. I don't think it'll be too complicated. If people make it seamless, then yeah, it should be fine.
I think you hit the nail on the head there about it being seamless, right? People don't want to have to do an extra layer on top of what they do, but when it's all kind of, you've got a one-stop shop. I mean, if we look at things like Hydra, the future that Cardano is moving towards, this is my personal take on it. I think the majority of action takes place on these layer twos and side chains. If you look at something like Hydra, it's all about diverting the traffic from the layer one, but maintaining and keeping the security of the layer one, and routing it to Hydra, and then cross-referencing it with the layer one. I think this is the way it's going. And just to touch on your point about price, actually price in some regards is fundamental to some of these proof of stake cryptocurrencies, because the higher the price, the more money a attacker or somebody that's looking to accrue a large amount of stake to nefariously act against the chain is going to have to put forward. So it's interesting. I mean, there's lots of people out there that talk about price. Price isn't the be all and end all. And if these cryptos didn't have anything fundamentally going on with them, I didn't invest in the likes of Dogecoin, because I thought fundamentally it wasn't very attractive. However, that turned out to be the best performing asset of, to my sort of astoundment. But the people that say, okay, they're not here for the price and they're in it for the tech, why are you buying the coin? It doesn't really, I don't know, that's just my take on it, I guess.
I need to confess, I did buy Doge. I did make a nice profit from it. I could never forgive myself.
Sorry, we had to cut Paddy out there. We just had to kick him off the stream.
Yeah, well done.
Sorry, Paddy. Do you want to rephrase that?
It happened one time.
No, do you know? There's nothing. I don't think there's anything wrong with that at all. I think if you're buying something to make money off of it, that's exactly what you're doing. It doesn't matter if it's Dogecoin or if it's whatever it is. So all the power to, in fact, that was actually a mistake that I made, was potentially not buying Dogecoin and being too sort of, looking under the hood and going, well, hang on, it doesn't even have its own mining. It's, inflate anyway, so on and so forth. But yeah, no, well done for that.
I'm just jealous that I didn't get in on time and make a profit on it.
I'm guilty. But my only confession on it is what I had done is I hadn't done any football bets for a while. And I was like, okay, I've done a wee bit, blah, blah. I'll put a couple of $100 in. And I left it for a good while, and then it was profitable. So, it wasn't the big decision. But anyways, we can move on. Okay.
No, I mean, there's meme coins coming up on Cardano now, aren't they? Or meme coins, quote unquote. So, maybe there's opportunities. Who knows? It's a world of opportunity that's in front of all of us, I think, with crypto and what's going on.
Yeah, and look, that's what a lot of them coins are there for now at this point, is people trading in and out of and trying to. It's just unfortunate that a lot of new people come into the space and they jump into them. They get completely burned because they don't see it, that you get into them coins and you get out fairly quick as well. And they get in and stay in expecting the 100x and they get burned. And then all of crypto is a scam because they got burned on something that was meant to be a 100x coin. And then they don't look deeper into crypto for a few years. Then they don't look into ones that are actually trying to do something, which I think all of us believe Cardano is trying to do. And we touched on the long-term potential, but where do you think we are now compared to where we want to go long-term with Cardano?
I mean, we're just started. We've heard that firing gun, and we've just, literally took a few paces in terms of not just Cardano, but crypto as a whole, or blockchain really. And then we've got people doing things with DAGs, which is not necessarily a blockchain, but still crypto. Right now, we're communicating over the internet. We're on a PC. These are all revolutions that have came before us that we don't even think about. We don't really put much thought into what's actually going on here and the tech behind it. We just do it. Blockchain's similar. Your banking, your identity, your everything, your house, you name it is going to be run on the blockchain. That's the world that I believe we're moving towards. And if you look at where we are today, I mean, how many people actively use the DeFi space, or how many people actively are even partaking in crypto? And we touched on it earlier. Paddy mentioned it. A lot of that's to do with the complexity of it still for people that aren't savvy towards it. So in terms of where we are right now, the race hasn't even, really started in regards to where I think we're going. I think I think blockchain is going to change the entire world. I've said that from the start, and I'm still here saying that. I think we probably all agree with that to some degree.
Do you think the latest events is sort of highlighting that more, in that we're, first of all, communication is more widely spread and people are starting to understand why things are failing, why banks are failing, and what they're doing to cause that. But do you think we're starting to see, okay, are we eventually wising up to say, well, the banks don't really work for us, do they? They don't work for the system. They don't work for everything that's going on. It's an old system that is continued to be used and pushed. And we haven't, it's kind of like our mobile phones have evolved. Our banking has never evolved. And I feel as if we're at a point where banking needs to evolve now. It's the same old thing for so long, and it's never really changed. It's just migrated from one being 10 minutes away to being sort of electronic, but it's the exact same thing. And where crypto, I feel, is, well, not crypto, blockchain in itself, is the banking evolution that I think is just waiting to happen, but just doesn't seem to ignite as much as I want it to. I don't know what, maybe if I knew that, I would be a multi-millionaire. What's going to be the trigger for that? So that's the interesting part. I don't know what you guys think. Is this now the point where people are starting to realize banks aren't here for us? We got to have something better.
Yeah, I think at the minute, we don't know what way the markets are going to go short term. There's still a lot of unknowns out there with what bank could potentially be next or what the Fed are going to do next. But long term, I think what's happening now is highlighting one of the biggest reasons we want crypto. And it's like nobody else can touch what you have. No one else can come in and change the records once they're there. Once you have a secure blockchain, then it's there. Everything is yours if you hold self-custody. So I think long-term, there could still be more pain. We don't really know. We'll get into our thoughts on that soon enough on everything that's going on. But long-term, I think what's happening right now, we'll look back on it and think that was a big turning point for how people view crypto. You see what came out of the White House today and the different things that are going on about trying to say how bad crypto is. They just don't want to lose control. At the minute, they still have control of everything. And if they bring in CBDCs, if the banking system just transitions to CBDCs, not much changes in terms of who's in control of your funds and everything you have. So I think this is going to be a turning point in what people look at, and it's up to the likes of us and everyone else that's out there trying to push education on the space to show people what it's all about and why we need cryptocurrency, the good side of it, because obviously it's rife with scams as well, but still I'd say one of the biggest scams out there that's used for corruption is the US dollar. So we just need to highlight the good of crypto and not let them keep highlighting all the bad, even though we have so many actors within crypto itself just highlighting how bad things can be. Like, just look at 2022, everything that happened, Luna, Celsius, FTX, there's just endless amounts of it out there.
But, you know, the interesting thing with that was they were all centralized issues, right? So it's, you know, everything that's happening right now, and I know we're going to touch on it, is really highlighting the need for something that doesn't have a middleman that can mess up, you know, and that's fundamentally what crypto was born out of. Isn't it very interesting how we saw, you know, if you look at the kind of genesis block for Bitcoin, it has an article from the Times, and it says that, you know, banks on the brink of second bailouts, and we're kind of going through a similar thing, which is why I think that crypto's really had, or Bitcoin certainly, that typically leads the pack, has had such a great time. But yeah, no, I agree with both of what you're saying. I think, and Paul, you're absolutely spot on with, you know, the biggest Ponzi is really the dollar or the great British pound. You know, we've all, my personal belief is being duped into giving up the best years of our life and sacrificing so much for something that largely is made up. You know, Adam Smith, the kind of founding father of modern economics, said very eloquently, money is just an ideology. You know, and I think that actually applies to crypto in some regards as well. You know, if people think it's valuable, Bitcoin, for example, people think Bitcoin's valuable, and there are reasons to think that, then it's valuable. You know, and the fact that there isn't somebody that controls it, that we know about anyway, you know, touch wood, is that's a more appealing, in my opinion, system than the one that we currently have that's controlled by you know who, you know, Voldemort. You know, it's very interesting what's going on right now.
I just tried to share there, Paul. I seen this image. Let me know when it comes up.
Yeah, you're up there now.
I seen this image the other day, and I was like, I had never actually thought about this and looked into this in detail. I always hear about people saying, you know, your money is worth less, and inflation every year it makes your money worth less, and you know. But when I seen this, I actually thought, oh my God, it's crazy how much the dollar is worth now, and it's going to continue to become worth even less because they're continue printing. They can say whatever they want to say about interest rates and everything else that they're trying to do. They're continuing to print money. They're going to increase the debt ceiling within the United States, I would say, maybe prior to elections, to get more money out there to try and win the election. But that's going to reduce it even further. So you can sort of see where it's going. Is there a way of solving this? Is there a way that they could claw back all this money? I don't think so. This is different. This is something that it's uncontrollable now. You know, what do you guys think? Have you seen this before?
We're very much in a death spiral, I think, for the dollar. You know, the fiat system is inflationary by nature, right? So if something's borrowed into existence, you know, if we just start the system and I borrow Paul $100 and I say you've got to give me 105 back, well, inherently I have to then somehow we have to come up with this extra $5, and the only way we do that is for inflating it. And the more fiat you put out there, the more debt that you essentially have on the, you know, you've got two assets with or you've got two components to money. You've got the asset and the liability. So the asset is the dollar. The liability is the debt that has essentially allowed that dollar to come into existence. So a mortgage, for example, liability, asset being the house and the money used to pay for that house. Problem you've got with the system that we're in right now, and this is why this is the case, and you've seen the dollar whittle away so much, is as we've took on more and more debt over time, we've needed to inflate more and more to sustain that debt. It's why we've come into such problems, and we've seen Silicon Valley Bank fail, and First Republic Bank, which is the 14th largest bank in America, is because ultimately, when you increase those interest rates, the burden that's already massive has now become even greater. It's why actually they need to have zero rates, even negative. You had negative rates in Europe before all of this started to take place, because the system needs that. Otherwise, it implodes on itself and you have mass defaults and the whole thing just becomes a complete Ponzi. But we can get into that at another point. So it's very interesting.
Yeah. What do you think, Paul?
Yeah, it's I've seen that picture of the dollar before, and it just does highlight like what it's worth now, and it really doesn't look like there's any way back. And this isn't just about the dollar, in case someone thinks we're concentrating on the dollar. This is every fiat currency. Yeah. This is generally the way they go. I can't remember now how long the life cycle generally is for a currency. I know I've seen it somewhere before, but I can't remember. But I know that the likes of the pound and the dollar are probably getting close to what the lifespan generally is for a currency. And what you touched on earlier, AllinCrypto, is that something is only as valuable as people perceive it is. Something, it's just like Bitcoin. Bitcoin or ADA has a value because people give it that value. They believe it's worth a certain amount. And it's the same with the dollar. And it generally gets to the point where there's so much debt that people just say it's not worth anything anymore. You look at, what was the country where the streets were littered in money? Not Venezuela, was it? Or
it was a European country, was it?
It was a South American country.
There's been a few, I think.
Country. It's only maybe 2 years ago where inflation just went so crazy that money it wasn't worth anything. The streets were flooded with money just thrown there because it wasn't worth the paper that it was printed on. And all fiat currency will go that way eventually, I think. Now, unless someone comes out with a magic solution, I just can't see it right now, how they stop it. It's like you say, there's a debt spiral in it. And just before I forget, Jensen was asking earlier about USDA. I know this is off the current topic, but I haven't heard any updates on that. I know, Olin, you had Vinita on there a while ago as well.
Yeah, I had Vinita on. Vinita's a great guy. I really like what they're doing. It's going to be interesting to see what happens with USDA, because obviously with what we saw with BUSD, there's been this kind of, regulatory concern that's been pushed forward. But as far as I know, USDA is still coming out. And I think that will be exciting because that will really be the first fiat-backed stablecoin that we have on Cardano. I know we've got some that have been bridged over, but that will be, I think, a real big deal. We've got JED. I have to be honest on JED, if I'm being 100% honest. I thought it would get more of an uptick than it did in terms of total value locked. I was expecting a bit more out of, and there might be a reason why it didn't quite achieve that. But I think USDA, as far as I'm concerned, is still going ahead. Not sure on any timelines though.
Yeah, I think USDA, I'm definitely excited to see what comes out of that. And I think longer term, it probably could be bigger than JED in JED's current format because there isn't enough incentive for people to get involved with Shen right now. People who have been involved, and I minted on day one, I minted some Shen and I still hold it now, but there's no incentive for me to go in and mint more Shen. For me, the way that I weigh up my portfolio, I always put percentages into different risk categories, and there isn't enough potential gain on Shen right now versus the risk that's there, because you get your staking rewards, you just about get your staking rewards and slightly more, but if the price of ADA goes down, it puts too much pressure on the price, on the number of ADA that's needed to fulfill the JED in circulation, so Shen holders get affected there. So I don't know what they can do, but we need to find more incentives on Shen. And I think if they can sort that side, then we see a lot more JED coming into circulation then.
I think that's quite reflective of the overall DeFi space on Cardano right now. there needs to be a reason for people to use it, and maybe that's something we could improve on as people educate on the space. But I think actually Shen and the Jed sort of issue, I never know what to call Jed. It's always a bit of a
the more people have talked to, I think they kind of go with Jed is the majority, but you still get some DJeds and everything out there as well. I haven't heard the official anyone call the official name, but on Cardano staking, in a lot of senses, Cardano staking is too good for DeFi. DeFi really needs to offer a lot more, because you can hold your ADA in your wallet. You get I'd say it's down to 3.4% APY now with the way that staking goes, and it goes down slightly every epoch. But when you factor in, is it worth someone risking their ADA in a smart contract or in some platform for 5, 6, 7%? For me personally, it's not. For that kind of rewards, you really need to be a decent bit higher for me to start risking some of my ADA. So there's work to be done there, and trying to get more incentives for the users, and get it that there's actual real incentives there. And it's not like some of the DeFi we've seen across crypto over the years where it's basically a Ponzi. It's just one big round circle, and it's nearly like the Fed printing more money just to satisfy, and then eventually it all implodes and everything falls down after all the yield is gone out of it and stuff like that. But probably getting a bit off topic for this one.
Solving all problems tonight.
That's it. I've lost track of where I was in the comments as well. So if I missed anyone's comment there, do put them in again, and I'll try and pull them up. But what was next on our... So we get into banking or other projects next? Where do you want to go?
Go wherever you want. I just want to touch on the where I see Cardano going in the future. And Paddy had mentioned it about it being, I'm a big fan of ecosystems like Polkadot. I like Cosmo. I like. We can talk about some of the other projects that I like, but Polkadot, I've got this really different way of doing blockchain where they've kind of said, we don't want to, build a smart contract platform like a layer 1. We want to build something that they call like a layer 0. We want to provide the security for people to build their own blockchain, and then they can deal with smart contracts or whatever it may be. Actually, I kind of see Cardano, although it's done it in a totally different way, going down a similar path. So we spoke about Hydra, and we spoke about a number of other things. I think you're going to have more traffic and usage of the layer 2s and side chains built on top of Cardano than you will Cardano. I think the role that Cardano is going to play in the future is going to be like the chain that secures these layer 2s and provides them the security, because its security mechanism is great, right? We've seen Cardano run, touch wood, without a hitch thus far. And we even saw was it 51% of the nodes went down at once?
Yeah,
and it did just fine.
Bit of an outage. Well, and a bit of a downtime on some of them. 2 of mine went, and I don't know the other ones.
I think one of my relays went, yeah.
So it was interesting. It was a weird one. So they managed to fix that up, which was pretty good. But yeah, and the other side of it is, you're exactly right. On security is going to be really important, because realistically, there's 3,000 plus stake pools, which probably have, I would say, over 10,000 servers. I would guess at a minimum supporting the network. That would be my guess on the total amount of servers. And all of that is extremely important. 1, to prevent attacks, 1, to prevent DDoS, 1, to obviously be secure enough that the system can't be hacked in itself, and it's distributed enough that no one can take over. So it's ready to go. It just needs then, what you're saying, a layer 2 to want to use that. I always come back to this as it's an easy example to give, because I don't have any other great examples, but gaming is going to be perfect for that area. And running all the transactions within a gaming environment is going to be perfect for that. And I have seen some of the ones from Sebastian, that those guys are all working on a new sort of gaming infrastructure for people to use. So that's going to be interesting to see how that kicks off. And I'd like to see more. I've seen also Patrick and Endmaker hint at a few different things. So I'd like to see gaming take off. There is a few games, and there's a few metaverse style games coming. But I'd like to see much more. You could see the scenario where a game built for even mobile apps or anything like that, people unknowingly are using Cardano in the background. That's what we need. That's what you sort of would want to happen. And they're collecting X, Y, and Z tokens and items and products. and they don't really know that they're even using Cardano. You know, that's the infrastructure layer that I think we're striving for.
Yeah, I think that's where it's going. You know, identity, for example. You know, if people need to prove their identity and that's on a mass scale, I don't think that's going to take place on the layer one. I think that's going to take place on a separate chain, or not a separate chain, a layer two or a side chain. I mean, if you look at what World Mobile are doing, if you look at what, it's super excited to see how, and it's weird, you know, I've kind of seen my views on Cardano being a layer one and becoming super scalable on there. I've kind of gone, well, actually, it doesn't need to be. What it really needs to be more than anything is secure. And provide you that trust that you can then build on and do all these weird and wonderful things like gaming. Like, not that gaming's a weird, or you know, it's a wonderful thing, not necessarily a weird, but it's a very exciting future. I think we've got as you know, people looking into this ecosystem.
We don't want to be getting hacked all the time, losing funds, or turning off. Those are the key things to avoid. But we'll not say who does that.
Yeah.
You're on mute, Paul.
Mute. Yeah, I agree on that side of it as well. And initially I was looking at, when I came in, was Cardano will scale to be able to run whatever it needs to on the layer one. But the more I've been involved and the more I talk to people, it's like not everything can or should run on the layer one. A lot of the individual dApps, and if we want to go where we've talked about, where crypto and where blockchain can go, then that kind of stuff can't run on the layer one. Even with like input endorsers will be massive for Cardano and the throughput. And I think they have solutions in the work for finality as well, and how quickly the transactions settle. But I still don't think Cardano will ever be sub 1 second blocks and finality, and that which is needed for certain sectors. But Cardano security is its big thing. And if we can have, I don't know if it'll be roll-ups. Roll-ups are the massive thing. If you look at the money that's been invested across other ecosystems right now, Cardano, as far as I know from talking to devs, isn't fit for that right now. But in the future, it may be as well. Or maybe there'll be something else. But that's the type of thing that I think will be big, that you have your layer twos and that it comes back and it uses the security of Cardano. And there will still be lots of dApps and stuff that will run on the layer one. But a lot of the stuff, like you mentioned gaming there a bit, if you want to have a lot of the game on the blockchain, then the amount of saves that would need is just, it's going to kill the layer one in its current state. I don't know there's a place for it.
Did you not see the tweet today? There's Hydra on mainnet.
I think I saw that. Yeah.
Someone has spun up a node with it.
I don't know what's going on. I haven't delved in yet, but I'm very interested to see what's the use case. What's it being used for? So
I think
I asked the question. I haven't seen yet.
I think we saw a DEX maybe looking. Was it Sunday Swap looking to implement Hydra so they can sort of take that traffic off and do all the? I think it's going to be magical. I think when it happens, you know. But hey ho, we'll see how long it takes. I mean, putting a time frame on all this sort of stuff, I think is. In blockchain, how many sort of timeframes have we seen just years go by before they're achieved? Not that I think that's the case with Hydra, but yeah, very exciting. You can, I think there's someone on Twitter that you can follow. I'll have to find out who, that will show you just what work's being done in terms of GitHub. So it will have like a kind of graph.
I started following that for the open source stuff. It's good, yeah.
Really
good.
Good.
Marlow has been up there a good bit lately as well, which is. That was touted for being launched in March. Charles let it slip in one of his AMAs, but I haven't seen that going live yet. Someone else mentioned Mithril there as well, which would be another really good solution. That's kind of like verified snapshots, isn't it, of the blockchain, and where you don't have to replay the whole blockchain yourself.
It gives us dataless turbo.
Yes, I recently had John Wood on the show. Who's obviously now the CTO at the Algorand Foundation, who used to, was he the CTO at Cardano at one point?
Yeah, CTO at IOG.
And he was really excited about Mithril, actually. He said it's a great bit of kit because Algorand's doing something with state proofs, and it's a similar kind of concept where you kind of compact the blockchain so that you don't have to constantly go through the whole thing to get to where you need to go. But there's loads of amazing things coming for Cardano and crypto in general.
Yeah, John Woods, I really liked him when he was with Cardano. He became a favorite on the Cardano 360s as well, because he had a very good way about explaining very technical terms and breaking them down really well. So before we kind of leave Cardano a bit and go into the overall markets and how that's playing out, there was a few things. What did I see? Oh, Jensen said about just wish projects on Cardano can launch faster. That is coming. I think a lot of us and developers as well thought that the smart contracts we were getting in, was it September 2021 initially? What came out then was very bare bones smart contracts. And when DeFi projects went to start building and start using them, there was a lot of different features missing. But in the Vassal hard fork, we got a lot of what dApps actually need to launch. And there's new ways to build on Cardano coming out all the time. Is it Icon or Aiken? Seems to be very popular. I seen ADA had some of their contracts audited using Aiken, moving away from what they were initially using. So I think with new tools and new ways for people to build on Cardano, over the next few years, we'll start to see projects being able to build a lot quicker and get their projects launched a lot quicker, which would be good to see. But anything else on Cardano before we move on to looking at what's going on with the overall crypto markets, banking?
I don't think so.
Yeah, talking about building on Cardano, it's very interesting. Niels in Pertalang, I don't know if you've managed to speak to him, the individual that's doing...
No, that's the Python, isn't it?
Yeah, the Python languages. This is, I think there's been and again, I haven't got a technical background, but I've spoke to people that are, computer scientists, technically gifted in that sort of stuff. I think Haskell and Plutus has been quite a hard thing for developers to, just due to its complexity, build on top of. You do have projects, and Pertalang's one of them, that are looking to make it a lot easier to code up a smart contract or code up a dApp or something like that through introducing languages. And the really interesting thing with that is, which really kind of reinforces this idea that Cardano will be the kind of security layer of everything, is if you write a code in those kind of languages and you deploy it on Cardano, Haskell is still the base layer that it's deployed on, right? So you've basically just took a different language that you're familiar with, but you're actually utilizing the underlying Cardano Haskell secure, brilliant blockchain. And I think this is a really interesting thing.
It's a common thing within general other projects and languages in the world. The likes of Java and Go, and a few others, is it Go? Scala, they all combine to like a bytecode, which is, you could say, your Haskell variant of running a specific language. So and it gives you that added security. With the presentation code, can be anything, can be Python, could be Haskell. Maybe you'll see a Java variant, maybe you'll see a JavaScript variant, and I think I've seen one or two people working on one similar like that, or any other type. Maybe plain English, who knows? It's probably getting there with the front end style stuff, but that's what you're getting at, is that there's, as long as it compiles down to the original Haskell format, then it's exactly the same. There's no loss of security there,
which is huge.
Yeah.
And GPT will be writing all smart contracts in another year anyway, so it won't matter what language you're doing it.
Do you know, I did think about that actually, because I think they've got their GPT-4 out, or it's currently being tested. Yeah. Surely you could tell it to write you up a smart contract. Is that something? Has anybody tried that?
There's another one as well. It's GitHub Copilot, which you could probably merge both of them into. ChatGPT could probably give you the base template, and you could probably use Copilot for helping you with the rest. So that could be multiple products basically deciding everything for you that goes into the smart contract.
Scary world, isn't it?
Yeah. And then I used Copilot a while ago for testing it out with, I was doing some JavaScript. And before I even moved to the next line, it knew what I was going to do. So it recommends what I was going to write as my next piece of code, as if the way that I think it does it, and it's my high level, non-AI sort of interpretation, it has a library of thousands and thousands of lines of code that it can sort of parse seamlessly and go, well, if someone usually does this, they usually do that after. So it's going to be interesting. I don't know if they support Haskell yet, but I would say they probably support Python. But AI is going to
It's
take
interesting.
over.
There's a lot of people that are getting their university degrees that probably shouldn't have been.
Yeah, I'm going to need to find a new job. Software engineering is what I do. And this is probably, the end is coming.
Yeah. in a nice way. Or maybe not.
Skynet is coming for us all.
Yeah.
So looking on to the overall macro environment, you concentrate a lot all in on the overall macro as well. You were one of the first two channels, I think, that I follow anyway, that started talking a lot about this and looking outside of crypto, looking at money flows and looking at things like that. So what would you generally look at in the markets to get a picture of what's going on?
Yeah, so there's like a certain set of criteria that markets do well under, and that's when they're essentially printing money and putting money into the economy. And when I say they, I mean the Federal Reserve or whatever central bank your country comes under. So really, it's very interesting because I wasn't necessarily like a macro. We've all started hearing this word macro thrown around crypto Twitter non-stop now. And I don't think many of us were that macro focused really up until we had to be. So I listen to a lot of people far smarter than myself that have been studying the macro for years, that have followed market cycles. And really what we saw was we started to see correlations between crypto and the stock market, correlations between crypto and the dollar, correlations between crypto and the Federal Reserve balance sheet, the yield market in the US. So you kind of had to go, if this is correlated, we should be paying attention to what's driving it all. And that really is just money and the central banks. And crypto very much dances to the same tune as the stock market. I think there will come a point in time where, because crypto is still an emerging market, it will really excel. But generally, markets do well under loose monetary conditions. And what I mean by that is low interest rates and a Federal Reserve or a government that's pumping money into the economy to kind of keep it going. Because that money finds its way to markets. March 2020 is an amazing example of that. We saw the crash, and then we saw them basically have to foot the bill for everyone. And they did that in the form of borrowing money into existence, increasing their balance sheet. That money ultimately found itself into the asset class, which it does. And then, of course, the commodity class, which is what we're kind of living through right now with high inflation. And then what we've seen sort of in 2022 was them tighten monetary conditions, meaning they're restricting liquidity and money, and they're not putting it into the economy. In fact, they're taking it out of the economy through redirecting it to the debt markets, because all that debt now has a higher yield on it, more dollar demand, it goes back in there. And of course, markets sold off in accordance with it. So generally, I think all of us as investors should pay attention to what the central banks are doing, because they are we talk about market manipulation, they are the great manipulator.
You're on mute there, Paddy.
Sorry, we have the Fed. So this is what surprising me with what's going on. Did they not just add loads to their balance sheet in terms of a couple of $100 billion, maybe more a couple of days ago?
Yeah, 309 billion, I believe. They essentially in 1 week, as a result of Silicon Valley Bank, and this is why markets are getting excited, right? Because we know that when they're draining off the balance sheet, being tight with monetary policy, markets don't do too well typically. And they'll move in accordance with that. Well, what we saw was in the last week, they added, I think it was $309 billion to their balance sheet, which is half of what took them a year to get rid of. Yeah. So that's a pivot of sorts that markets have loved, but very interesting.
It is back to that old thing. They printed that money out of nothing. So they're printing on one hand, and on the other hand, they're increasing interest rates, which is going to likely result in them needing to print more. So you're going to do that. Like, they're trying to balance something it's just not happening. And I'm no financial or economic expert, but where does this balance out? PAUL today increased it by 0.25. People had sort of priced that in. It could have been 50, could have went, really gung-ho, but I would have expected more banks to maybe collapse because of that. But what win is he going to get out of that 0.25? I don't think that the past lot of raises haven't massively impacted inflation dramatically. you know. So this 0.25 raise, I feel as if it was a nothing. It was a nothing raise. You know, it isn't really going to change things for the better or for the worse. You could have just done nothing and just said, well, we'll wait and see what happens.
Yeah, he's walking an impossible road, Jerome Powell. I don't know why he's doing the job, because it's like a no-win thing, really. He's got to choose essentially between almost hyperinflation, which is what Bilagi's talking about, which is as a result of them being too zealous with tightening, or completely imploding the entire financial system. And we saw the start of that with Silicon Valley Bank. And what we saw was, because of these high interest rates affecting the bond markets, which all banks are stuffed full of. You know, in the UK, you heard about them stepping in and supporting the gilt market. They had no other choice. If that market goes down, the entire banking system goes down. So Jerome Powell's walking this. He couldn't have come out today and done nothing, because he'd have supported and sort of stoked the inflationary flame and markets. So he had to do a 25, but really they're running out of runway. You know, there was a time in February where what you saw because of sticky inflationary data, markets pricing higher rates, which means they sold off. But then you saw a huge undoing of that with Silicon Valley Bank. Now, it's interesting because in February, I was saying, I think they're only going to do 25 basis points. We've got many, many calls wrong, by the way, on what they're doing. I didn't think they'd get to 5% interest rates. I thought they'd get to 2.5 and something would have gone seriously wrong, like back in 2019. Yeah. But it's an impossible road that he's walking on. I think he had to do something. And I think ultimately, you know, markets are like on the kind of scent of they're going to have to bring rates down, or we're going to have more Silicon Valley Bank contagion, which if the Fed didn't step in and re-add half of what they've took off over the past year to their balance sheet, you'd have seen so much contagion. I mean, even in our space, you know, we saw Circle get caught up in the Silicon Valley Bank drama. You know, it's a dying system, you know, is the best way to put it. That's death spiraling, and the Fed's between sort of hell and hell. You know, there's no heaven in the either side that they fall with what they're doing.
Well, that's it. They've no other tool. You know, they have these two tools that they're trying to balance with, which is of the old financial banking system that has never evolved. Like I said at the beginning, you know, there's nothing revolutionary came in. I'm no economic expert, and I don't even know what way they would re-engineer that whole thing. But they're printing money and then increasing interest rates. That just doesn't work. It's just defeating the purpose. And the markets, I think, are realizing that after today's announcement, we're near the top in terms of interest rates and his old plan for that whole thing. And it's likely going to be, if another bank goes within the next 6 weeks, which I think is totally possible. I had seen a brilliant tweet, and I've been looking for it. There was a list of banks and all their reserve ratios, and how much funds they had per debt, and well, money mean debt, but you know, people's money within that bank. Some of them are like 93, 94%, and like those guys, interest rates change that whole thing, that whole dynamic there. And you know, if people start taking money out of those banks, then the interest rate and everything else, they're screwed because of their government bonds and stuff. So it's coming. I feel, I don't know who. I would have loved to have found that tweet again. It was an amazing tweet. So I'll have to dig it out. I don't know if you guys seen it.
It's interesting. I know that central banks typically, and it keeps getting lower and lower, the kind of reserves they have to hold. I think central banks typically it's about 10% they need to hold in reserves. So that means 90% of what you've given them isn't there, right? I mean, how did we end up in this? And the interesting thing for me is, I know my hairline probably doesn't suggest it, but I'm not that old, right? So I've been brought up and never known a system any different. The amazing thing that I think we're all going to witness is a complete monetary change and a new system, whether it's just the old one that they've now cloaked into, you know, here's some new clothes on it, or what in our lifetime. So it's very interesting. But yeah, essentially the Fed, the what they're doing is damaging on both aspects. And you know, inflation really is a monetary issue. If you increase the money supply, you're going to get inflation as a result of it. So they're trying to fight inflation, but at the same time stoking those flames. So you're absolutely spot on about them being contradictory.
Do we think, when's the next meeting?
For the Fed? Yeah. So I don't know if they've got one for the end of the month, but they'll have another meeting to have probably a couple of meetings, and you have multiple Fed speakers from now until, the next CPI will be the big one. Of course, we had a 6% CPI this time. We'll see what the next one's like. Actually, if you look at oil and things like wheat and natural gas, not wheat necessarily, but natural gas and oil, they've come down, I think, nearly 20% this month. So markets will love that, right? Markets want lower inflation. They want the Fed to stop what they're doing. They kind of almost want banks to fail because they know that the Fed has no other option but to kind of come in and stimulate them. And if you look at March 2020 at the time, it was horrific, right? I just launched my channel and I was kind of telling people, look, guys, it's okay, at a time where even I was going, it's a dodgy old time. But actually that turned out to be the best thing and the catalyst that took Bitcoin up to 69K, and some of the altcoins like Cardano did very well out of. So crises are sometimes a good thing.
So more banks to collapse, interest rates to not change. Well, even if he does zero, my prediction, I'll give my prediction, and I'd love to see it come true. A 0% on the next rate and another bank or two going, and it should set things in motion. That would be what I would foresee.
I think on the banks and stuff, some people think that what happened with FTX is the same as what's happening with the banks now. So just on a high level, and you can correct me then, AllinCrypto, with anything I miss out on it, that FTX was very different. Actually, they're not massively different in that when you put your money in the bank, you tell them, yes, you can use my money to try and earn interest in whatever way you want to do it. They used to have to hold a lot more reserves than they do. I think you mentioned 10% now with fractional reserve. I think something changed in around March as well, 2020. They changed the amount the banks have to hold. So the banks can use your money and go off and do whatever they want. With FTX, they weren't meant to. They were meant to hold your funds there, and that was fraud, basically what happened in my opinion. But total with fraud. The banks, they use your money. A lot of times they put it into treasury bonds. And when a lot of the banks, they took funds like the ones that went bust, they took them and was it 5-year bonds they put it into, where they lock up the funds for 5 years, but they locked them up before the interest rate hikes started to come in. So they locked it up with getting maybe 1% back or something low, maybe 1.5%, depending on when they went in. And then when interest rates started to get hiked up, it meant that on the secondary market, the bonds that they had locked in for 5 years, the banks had locked in, weren't worth as much as they were. And in some cases, they weren't even worth what they put into them. So it meant that when customers came back trying to take money out of the bank couldn't get money back quick enough. And if they did have to cash in the bonds early, they lost billions in some cases on cashing in early. And then they didn't have enough of funds to fulfill everyone. And that's where that's where the government are coming back in now. And is it credit swaps, or I'm not too familiar with that? Is that where they're willing to honor what the banks should have got back with the interest rates?
Sort of. So they're doing, the swap markets are a weird and wonderful thing, right? It's basically how international sort of trade is done from one currency to another. What all the central banks essentially came out, and by the way, they did a similar thing in 2007, right before the financial crisis. Dylan Leclerc posted something that was really interesting about that and brought up an article that said basically the same thing as what they came out and said this time. Essentially, with the swap markets, what you've got is, because we're in this very low liquid environment that's been caused with sending the demand for the dollar through the roof, you haven't got the liquidity to honor swaps and already outstanding arrangements there, essentially. So what the central banks around the world have done is gone, okay, well, we'll give you the dollars to make sure you make those arrangements with the agreement to pay it back. So they're providing liquidity to the swap market, which is kind of a form of QE, because it will find its way into other markets. But at the same time, really just creating a way bigger problem in regards to lending more money. So that's kind of what the central banks, all of them, or the majority of them, certainly the US, Canada, the ECB, Bank of Japan, Australia, they've all sort of came out and said, we'll provide the dollars if they're needed to prevent further contagion. And I think we saw a lot of that with Credit Suisse. We actually saw the Swiss government step in and say, look, we're going to have to back Credit Suisse. This is the problem, and this is the real root of the issue, is all these banks are insolvent. It's just, how long can you keep this kind of Ponzi scheme up for? And the government's already said we're committed to keeping it up for as long as possible. And what value does that then put on money? Might as well be the clown token at this point, you know?
There's been crazy mismanagement, and you wonder, was there any risk management or any department looking at risk in these banks when they were going into 5-year bonds? And it was probably in a time where markets were up only, and that was it. They didn't care. They thought, so we're just going to make extra money, and customers aren't going to be trying to take their funds out of the bank, or not. That volume aren't going to be. And it's just crazy that there is options for shorter bonds. Like, I think they go down to 3 months you can get or something, or even a year. Why weren't they taking something like that? Even if it meant a smaller percentage, it would have meant that most banks now, if they had to take that strategy, they would be okay now. They would be solvent because they wouldn't have had to take the big cuts on selling on the secondary markets. It's kind of crazy to me from this side. And they call crypto risky, like, and
ironic, huh?
I had seen a bit of I was watching a guy and he was a bit of a conspiracy theory on us, but I liked it in that there's a lot of places and big investments throughout the world, and not name any places or locations, in that they have invested in a lot of American banks previously. And the current play is, what is happening is they're withdrawing massive amounts of funds on purpose, along with shorting the shares of said bank, and making, obviously they're causing it by all, but also knowing that they're going to make double their money back in shorting it. I think First Republic was a good example of that, where that's basically a forced bank run to cause the share price to absolutely collapse, and that was shorted to death, and halted so many times that, and this is the reason why people are going to do it more. They can see there is an opportunity here, and when any bank that comes out within the next days, weeks, that there is a bit of weakness, it's going to get shorted, and that is going to make people worry who have their money in that bank, and then they're going to continue shorting, and it just continues on. And I know that the government have said, they were going to give loans in X, Y, and Z, but that's not how it works. How it works is, if someone starts seeing a weakness, it's shorted to death, and the people worry about their money, and that just feeds into the shorting.
It definitely goes on that. Actually, with Luna, there was a lot of rumors about BlackRock, and I can't remember the other one, that actually may have or had some involvement in the crashing of Luna, and then actually sort of took it out maybe deliberately. Now, I don't know, that's not been proven, but I do know from first-hand experience, and certainly lots of second-hand experience on this matter, that the financial markets are shark-infested waters. And if they see, a lion goes for the gazelle that's limping, right?
Mm-hmm.
Then it's a feast. This is kind of what happens. And I think you're absolutely spot on. There's massive contagion. And it's funny, First Republic, actually, they were talking about it being a short squeeze. Mm-hmm. And I'm coming out going, do not, don't even play in that game, because they're just going to take your money from you. But it is interesting. Conspiracy theorists as well are often spot on the money, and they get a lot of discredit for being called conspiracy theorists. But if you look at what a conspiracy is, it's people conspiring to do something, and but I don't want to go down that rabbit hole.
An unproven fact.
A lot of the time, yeah.
Yeah, and you look at, there's a big run on the small banks now. So potentially there's bigger players that play there that are blowing lots of it out of the water about certain banks and trying to short the stock of them smaller banks, because there's a lot of people running to the bigger banks. I think Chase and can't remember the other one of the bigger banks in the US. There last week, they had their biggest inflow of new accounts being opened because people are scared to hold money in smaller accounts. And they've seen the US government come out and they've said they're going to back the banks that went down. Normally, FDIC insurance only backs, is it 250K in an account? But now they're wondering, will they cover it? JP Morgan has said there, will they cover more than 250 in every bank? Can they do that? I suppose if they just keep turning on the printer, they can, but it's not going to work. The end game will just come up a lot quicker if that's the route they go down. So it's hard to see the way out of it for them at this point.
Yeah, they're letting the small banks scream, that's for sure. And actually, I think this is what the Fed want. I think they don't want loads of little banks. I think they only want a couple of banks that they have control over. Or we're seeing the Fed now come out in July, I think it is, which isn't it's not CBDC or blockchain. But actually, I think that the world that we're moving towards is you're going to have a bank account with your central bank. So they're going to get rid of all these small banks, and you're essentially going to have one bank that is linked to the government and controls everything. And that's how this is going to go. We've actually seen consolidation of small banks a number of times. How the Fed, one of the reasons the Fed came about supposedly was because you had loads of bank runs taking place with all these independent banks. So the Fed kind of came along and said, okay, we'll oversee this and make sure this doesn't happen. And that's kind of how you had the formation, and often is how you had the formation of central banks around the world. So we're seeing a similar thing today, but in a more regulated market. So I always tell this to people, as much as things seem troubling and they might seem a little bit uncertain, the opportunities that are in front of all of us as a result of all this are insane. People are going to change their lives coming out the other side of this. Whether that be crypto or what is still to be seen. But I think crypto.
Yeah, Alex mentioned here, we talked about this before we went live as well. Charles's video the other day about once you can tokenize the treasury as security, we can use that instead of a CBDC or a dollar. We won't go too much into that now, but I'd say for anyone, I think that was only about an 18, 19-minute video, so short for Charles. And it's back to some of his really good videos to watch. I'd say anyone interested in this type of stuff, make sure you check that one out. It's talking about crypto in general. It's not just Cardano specific, but I like to see these types of videos coming out from him because he talks about overall how crypto can help. And it's one that can't be criticized as much as some of his other videos. There's people who will take angles against different ones he puts out, but that's definitely a really good one to check out, I'd say. And you said actually AllinCrypto that he put one out today looking at what came out of the White House. I didn't get to see that one yet.
Yeah, it was interesting. He called it a hatchet job. But I also think at least they're paying attention to it, right? There was a time where we couldn't even get a mention. Now, and actually, funnily enough, the start of the year, I actually said that we saw the SEC go after Kraken. We saw the SEC really bring the kibosh down. There's actually a lot of very bullish connotations to all this because it's my belief that for crypto to gain mass adoption in somewhere like America or the UK, it needs to be regulated. And we saw a real push. I know that's a very unpopular maybe thing to say in a decentralized universe, but the powers that be, I personally don't think in somewhere like the United States will allow crypto to flourish without regulating it. That's the kind of path that all industries have gone through, but we'll see.
Yeah, just on kind of had it up here for a while. Actually, I think are you sharing the Coinbase thing there, Paddy, is it?
Yeah.
I'll bring that up. Actually, AllinCrypto, what's your time like? We're already on the hour. I forgot to ask you before.
Good to go. I can be, I've not got much on other than staring at the computer and damaging my eyes for the rest of the evening.
Well, we'll try and wrap it up by 10:30. You're the same time for us.
Yes. Happy to go longer.
Good. Paddy, do you want to go through this?
You can see it all right, yeah?
Yep.
Yeah, so someone had put in one of the comments that Coinbase had received a Wells notice, and I think there was someone recently had one. Who was it? Binance.
BUSD.
Yeah, BUSD. Yeah, we say it's not Binance, but it is Binance, but someone else runs it. But anyways, so Coinbase, this is massive. I haven't got time to fully go through it all, but in short, a Wells notice is very severe, in that in the way it's basically, in my view, for me, an easy way for me to describe it is it's a sort of like a yellow card in simplicity, and we're keeping our eye on you and we're watching you and we're going to have a chat about what we're going to do with you, and that's a very simplistic. But what are they doing? So they're staking an asset listing. So this is quite worrying for proof of stake also. They are likely going to it's similar. Who had a staking issue recently?
Kraken. And I see CC just said there as well. Kraken got one too, he believes. I just looked at Kraken's Twitter, but I haven't seen anything yet. But maybe he's talking about the previous one. where they shut down the staking platform.
Binance as well. If you're in the UK, you can't use Binance's staking services, basically, or it's very limited now. So they're definitely targeting this.
That was a pure yield product, though. That wasn't pure staking at all. Like they used to offer 15% for ADA staking for like 10 days or whatever it was, and that's. I think when I talked about the Kraken stuff as well, I think I do see where the SEC were going with all of that in the terminology and everything that was used. What a lot of platforms were offering wasn't native staking. But Paddy, do you want to keep going on that?
Yeah.
Sorry.
Yeah, no, that's grand. They're good things to discuss. But in short, what I found from it is focused on staking primarily, and I'm going to guess it's going to be very of the similar lines. So what you can imagine is the Kraken thing set a precedent, and that's massive in US law. If something's happened before, we can sort of use that to reaffirm our case that this is the way it should be. So in short, this is what I'm thinking they've done. They're saying we've done this with Kraken. It's very similar setup within Coinbase. Coinbase lists assets that you can stake. You earn return against it. They do it in the exact same similar way. They hold your tokens. They use that for the staking process, and then they pay you the rewards. They are seeing that as very much as a sort of security, and it is all to do with custodial. It is the key word there. So don't try and worry about the standard Cardano staking, which is non-custodial. You hold your ADA. It's in a wallet. It's staked to the infrastructure. It's not the same thing. It's where there's a middleman in between, and they do things. So Binance, I think, they offer ADA staking, but their legalities, they're very smart. There's so many different variants of Binance, and I don't know if you can stake in on Binance US. I've never went in there. But in terms of this notice, now Brian has come out pretty strong and said, they went and they, where was it here? They went before the SEC 2 years ago to, get them to review. But this is what the SEC does. I don't know if some of you have seen before where, people have presented them and then eventually after they find themselves getting sued. So Brian believes they're in the right here, which is probably doesn't matter what he thinks. They're going to get before a court. They're going to go before a judge, and it's probably going to end up, Coinbase is pretty big. I don't think they'll roll over as quickly as Kraken, but it is worrying. Anyway, just to wrap up and let you guys jump in on what you think. This is good for proof of stake infrastructure, in the likes of Cardano or any other proof of stake blockchain. It's good for them because then all the funds are withdrawn and it's people stake them themselves, and it's just more secure. But I don't think it's good for the general public or, normal, when I say normal people who are only getting into crypto to start dealing with these tokens, to pull them off the likes of Coinbase. It makes it more complex, and it's something that it's not as seamless for them. So, I have friends of mine who use Coinbase and they don't want to get wallets and they don't want to do all these things, and they just want to use this one app and it's easy for them. So that's the only bit I dislike about it. I have no problem with people using Coinbase for staking. It's great. It's good for general crypto. So it is worrying. I don't know how it's going to impact anything. What do you guys think? I'm going to skim on down and see if I can see anything that jumps out. But what do you guys think?
I think Coinbase isn't going to roll over. I like Brian. He generally seems to be trying to drive crypto forward. He doesn't come across as being the person who's out just for himself. I've seen him in lots of different interviews and that, and he really is in crypto, I think, to try and drive it forward and do it right. And a lot of even when you look back at what happened with Kraken, and the big questions that come out of it were, they were saying the Kraken should have registered, but was the process in place for Kraken to register, and how would they have registered? Would they have had to register every individual asset? Because staking is very different from asset to asset. Like with us for a lot of people here will be very focused on Cardano. Some people might only be on Cardano here and not realize how staking works in other platforms. So not all proof of stake blockchains are the same when it comes to staking either. In lots of them, you have to give up custody, or we look at Ethereum. If you don't hold 32 ETH, then you have to give up custody. You have to give it to a third party. And I think once they're done with the centralized stations, then it's them third parties they're going to look at, where someone else is doing the work for you. If you are not staking directly yourself, then someone else is doing some of the work for you. Even if you're just pooling the funds and it's been staked, then that's still someone else doing the work. And I think that's really where they're looking to go after. And like that, I haven't read into what this specifically is on Coinbase, just the highlights of it there. And I will look into it after this and sum it up in a video in the next day or two. But I think Coinbase aren't going to, they will fight this. And he talks about they're going to court and giving crypto its day in court to try and fight this out. So I think like XRP, they're not going to just accept it and take whatever fines and maybe shut down and stuff like that. They're going to see it through and try and fight it out, which I think will be good for self-custody crypto. And make the SEC, even if Coinbase lose this, make the SEC put the process in place. So then we can legitimately say that, yes, every staking platform out there should be registered, and this is exactly how you do it, or this is what doesn't need to be registered. But we need the processes to be in place. It can't just be they can come out and charge anyone they want and make up the rules as they go.
Just before we go on to AllinCrypto there, I just wanted to read this a little bit, and it reflects on something you just mentioned, Paul. It has obviously to do with securities law. So the key point here is they've asked the SEC which assets on their platforms, and they haven't given details. They've declined to do so. It's not very helpful, is it? It's they're a bit cloak and dagger, the SEC. And they have been in constant communication with them, over the past couple of months, and they have not responded. So I don't know what's going on. It seems a bit it is worrying, yeah. But I just wanted to point that out, and it is cloak and dagger, and it's a bit, would you not be a bit annoyed if you're Brian? You're trying to do all these things and do it right, and they don't respond, and now they're like, okay, here's a Wells notice for securities law violations, but we're not going to tell you how that's you're doing it wrong, And it's AllinCrypto. What do you think, man?
Yeah, we're seeing lots of really interesting things come out of the SEC lawsuit with Ripple. We saw something. Jeremy Hogan, I think it is. He's one of the sort of attorneys that's really focused on that case, and he's highlighting lots of things that are coming up. It's really interesting to watch. One of the things that they highlighted was actually that one of the judges has essentially said, well, I've got a little bit of worry with what the SEC is classing as a security or a commodity, because they aren't making any sense of it, right? They're not actually giving any sort of lines in the sand that you can cross. They're kind of, it's this gray area still. It's interesting what's happening with staking. Now, I actually do believe that regulation is needed for centralized exchanges. All of this actually, I think, stemmed from Gemini's Earn program. So I don't know if you guys were watching all that when it took place, but Gemini Earn was basically like Binance Earn, but for Gemini. They gave their funds to Genesis Trading, which is part of the DCG group or something like that, Barry Silbert's. He's also Grayscale and stuff like that. And then, of course, Genesis, because of FTX, went belly up. Mm-hmm. And then all those Gemini Earn program individuals basically have lost their money. So I think that's actually what kicked all of this off. Mm. And of course, I think there's a need for transparency so that we can prevent things like that with Genesis. But it is interesting how the SEC aren't really given any sort of clear guidelines that you need to follow. So all these crypto exchanges are in this really horrible position where, they're through default guilty. So it is very, very interesting to see how this unfolds. But I do think centralized exchanges need regulating. I think actually, I wouldn't say crypto broadly needs regulating, but there needs to be some sort of clarity given from the SEC so that we can move forwards. Because right now we're in this grey, uncomfortable area. And the only maybe good thing to come out of all this is the fact that something like Cardano, which is non-custodian, might do very well on the back end of it. It just needs to, we've got Lace Wallet and a number of other things coming up, which might really help simplify things. But there's definitely a silver lining and a golden goose in all this, I think, for coins like Cardano.
Yeah, I think it definitely will highlight the big advantages we have with Cardano staking when people start to look into it. And it did to a degree with Kraken. And I think as we go forward and more get called up on it, like there's lots of the industry doesn't look at Cardano. There's just a thing against Cardano. But when things like this happen and the whole staking mechanism starts to come to light across crypto, then I think Cardano will win over a lot of people in terms of how they do it and how you keep custody. And potentially, I don't think the regulators are looking at or taking Cardano's type of staking into account yet. A lot of the stuff, when you start to look at it and what they sent out to Kraken, I can't remember the name of the paper or the filing they put out, but everything they classed staking as was very different to how we have it. So I think it can be good for Cardano. And look, it's no harm to have regulation on certain parts of it like this, that people coming into the space know what they're actually getting into. And as far as I've seen with Coinbase, I think they actually are giving you the staking rewards. The only part that could be an issue for them is they take a fee from it. So when the stuff with Kraken went on, remember they put out a response to it as well, and they explained how theirs works and why they weren't a security. But the one line that caught me in it was that they take a bit of a fee from it. So potentially that's something that could come into play there, unless maybe they have it in their terms when people sign up to staking. It's probably there in the fine print somewhere that, yes, we're taking part of it, but then they're the one doing the work for you by staking. So we'll see. It's only breaking as we're on the call here. It wasn't meant to be part of it, but we couldn't not talk about it when it came up. And yeah, see, the Coinbase stock is tanking. And
oh wow,
who was it that sold? Someone sold yesterday. Not Cathy Wood, was it, or someone else?
No, she sold right at the bottom and bought right at the top.
Yeah, someone else sold Coinbase. Someone,
not sure. Yeah, Coinbase really just moves with the crypto market, right? I mean, it's what, 12% down today.
Yeah. So the thing that will be happening now, it's closed. So there's after hours trading, I guess, going on for a bit. But I would say tomorrow, this could potentially tank Coinbase. And remember, it was something we were talking about earlier, and not to cause FUD, and not to cause worry, not to cause drama, but bank runs, and not to be conspiracy theorists thinking about this, is this a strong enough thing to cause enough fear for everybody to withdraw all their funds? So, one point, if I know, now I don't stake on Coinbase, if I know if I can withdraw all my tokens and stake them somewhere else, practically feeds into a bank run. I'm not saying it's happening, and no financial advice given here, but I'm just theorizing random things.
Yeah, we saw Binance have huge withdrawals, not just from their BUSD, but their platform. Remember when we had all that, everyone coming out saying, get your funds off of Binance right now. The withdrawals were in the tens of billions, right? It was insane, and they handled it like absolute champions. I've actually got a bit of a soft spot, if I'm being honest, for Binance and CZ. I think he's a real incredible entrepreneur. This guy came from McDonald's to one of the richest guys in. And remember that when you go to the drive-through, it's you could be looking at the next CZ. So I think they'll handle it. I think Coinbase is a very strong company, but you are right. These things cause danger zones, really, don't they?
Well, people are going to short it tomorrow. Yeah, we know that.
For sure. And this is just literally broken. I don't know when the tweet was actually from. This has just come out from Brian Armstrong.
15 minutes ago. It's
Breaking news, guys.
The news comes out after hours trading. It's helpful for the stock of that company for news like this to come out. Maybe it was given to them before and they're only announcing it. I don't know what the rules and regulations are on that, or when they have to announce it, but he has announced it after hours, which is convenient too, isn't it?
It's also convenient that this is just a little bit of trivia here. Most bank failings happen on Friday evening. So they let you fester with it over the weekend and sort of come up with these weird and wonderful things that are going to happen on Monday that usually don't. But that's just an interesting thing that usually happens with banks. If you look at bank failings, it's always a Friday evening.
Yeah. Interesting. I hadn't noticed that before. That's interesting. I see. Let's show this. This is where I seen about the selling. You can see this is a good account here actually that I follow for puts up lots of real-time information about the markets. He put up about Coinbase shares tanking, but he also put this up about Cathie Wood sold 160,000 coin shares yesterday. So somebody always knows what's got. Now I don't know where this screenshot is from or anything like that, but only that I've seen good information out of this account before. That's why I'd kind of have some trust in it. It's interesting to see, like, somebody always knows what's going on behind the scenes and can jump in front of it.
Sold and shorted, no doubt.
We can't speculate on that type of stuff here.
Yeah, great account to follow, Gavin. He's really on the money with a lot of what he puts out.
Yeah, he's one of the good ones out there. Find for fairly quick information like that as well, and accurate information. But let's say we have about 7 minutes left here. Any topics either you want to cover? Anything that we didn't, that we talked about we might?
Yeah, it's going to be interesting. You know, we've got Balaji out there who's saying that Bitcoin's going to $1 million in the next 90 days. I don't know what everyone's thoughts on that are, but I'm personally betting that that's not going to happen. But I think he's on the money in regards to actually what comes to pass over time. You know, I think he's spot on with what he's saying. You know, he's highlighting all these sort of flaws in the banking system. I just think that he's trying to publicize it by saying, I'll bet £1 million that this happens in 90 days, you know, and he's done a great job of it. We're all talking about it.
Yeah. He's just too early probably in, but like, this is for anyone that hasn't seen it. This was the one here where James Medlock came out and said, I'll bet anyone $1 million that the US does not enter hyperinflation. And then Balaji came out here and said he'd take the bet. He'd bet 1 Bitcoin. So he'd be putting up 1 Bitcoin, or he would expect 1 Bitcoin in return, wasn't it? He'd put up the $1 million for the bet. But he has come out, he said in 90 days that Bitcoin would be $1 million due to hyperinflation. And hyperinflation on a very simple level is where basically the value of the dollar is worth nothing. It just, inflation goes through the roof and your dollar isn't worth nearly anything. But he has come out and said that, seen some comments from him and since this, but he doesn't expect it to happen in these 90 days, but he's doing this to highlight the real issue, that he really does believe we're going into hyperinflation, and he wants people to get out ahead of it and start understanding what it is. And he said if it takes him losing a few $1 million, then it's worth it to get the education out there so people start to realize what's going on. Look, it'd be brilliant to get $1 million Bitcoin in 90 days, but then what would $1 million be actually worth if that's what happened? We'll take 100K first, or maybe even we'll take 30K first at this point.
What would a pint of milk cost, you know, if that was the situation, you know?
Yeah, be an expensive cup of tea.
So I'm not retiring in 90 days?
Yeah, relatively. Retiring your bank account, maybe.
Yeah.
It is fascinating what he's highlighting here, and actually this is a really important point I think everyone should adhere to. Have something outside of the system, whether it's Bitcoin, whether it's gold, whether it's silver. One thing I like to do every time I go to the supermarket, although it's pretty interesting when people go rummaging around my drawers and find this huge cabinet full of alcohol, essentially, is I go and buy, you know, I'm not really a big drinker, even just, you know, a liter or so of whiskey or something like that. You never know what's going to happen down the line. If you have something that maintains value when the value system isn't there, as we know it, then I think that's quite a safe. It doesn't have to be a large part of what you own. Depends how zealous you are on this all coming to pass. But you need something outside of the system, and I'm talking about the monetary system, to help you through this. Could be housing, could be anything, but you need something. I'm a big believer of that, and I think everyone should have at least a bit of safety. That's really what gold is, I guess. It's a safety against, you know, the government.
Yeah, and actually, anyone who isn't familiar with Balaji, I wonder if I have his other. I'm going to kill the stream now by mentioning the next word, but I think it's worth it for people to go and take a look into what he proposed before. I think it should come up now. we won't say it, but this word here, when this came out first, he started talking about with the pandemic, what could actually potentially happen. And when you start to look down through what he talked about, everyone would have said back then, that's absolutely insane, that type of stuff. We would never accept it. And we went through it. The majority of us accepted it at the time, even though maybe we didn't want to, but we just accepted it as part of our lives. And all around me, we did anyway. And some of the stuff, when you look back at it now, like having your limits that you can't go so many miles from your home and stuff like that here in Ireland is just, it seems insane now that people agreed with it, but that's the way it was. But so this is a guy who's very credible in what he does and a very smart guy. So it gives other people might have come out with this bet and people would have just said, oh, it's just a crazy thing. It's another person looking for attention. But this guy, it doesn't really feel it's him looking for attention for himself. He's genuinely trying to push the word out and help people, I suppose, in the longer term to understand the bigger picture.
Yeah, he's on the money, really, isn't he? It's going to be interesting. The fact that he got that last call so right, it kind of gives a little bit of credibility to the call that he's making now. And certainly with the backdrop that we've seen, my personal take on actually what's going to happen is I think markets have got this real window of opportunity where they're going to do well. I think a lot of this sort of bank failing gets quietened down, only for it to pop its head up later on down the line. And I think if they sort of control it a little bit, they'll allow things to run, only for something greater to come and take us all out later on, in terms of a bank or everything just kind of, you don't, when the Fed typically pivot, that's not a good time for markets because usually they're doing it because they have a reason to do it. They need that stimulus. So we want the Fed to keep rates where they are for a little bit longer. We'll enjoy whatever comes with it. And then we'll deal with the consequences of a failing banking system, hopefully in a few months' time. I don't think it's all going to happen right now, but who knows? If banks properly go kaput, it could take a week for Bitcoin to go to 1 million, No,
yeah. And I think you're right. I think we're at the beginning. So do you ever notice we always seem to be in crisis? There's always some form of crisis, energy crisis, financial crisis, health crisis, something crisis. Everything's a crisis. But at the minute we're moving into the financial crisis rather than what do we have? We had an energy crisis there for a while. Even though there's tons of energy and everybody has loads of it, but there was an energy crisis. I think there's also a partial food crisis going on in certain parts of the world. And then now is financial crisis. So we got to get people who get these things going and make money from crises are really happy at the minute. But in terms of our financial crisis, it's bad that we have to say multiple, but it's I think we're only at the beginning. I definitely think we're only at the beginning. I think we're going to have a few interesting months. Should you just let it crash and burn and then recover quicker, or draw it all out and then it's still going to crash and burn anyways? I don't know. But I do think there's more pain to come. That does not mean there's going to be pain in crypto. We don't know what's going to happen there. I'm going to still be here, and I'm sure you guys are still going to be here. And this crisis will pass, and we will still be here in a year or two going, oh yeah, remember that financial crisis that we had? Well, this is all the wonderful things that we've invented from it. Isn't it great? Well, that's what I'm hoping for. That's my vision. That's what I'm going to finish off with.
Yeah, I suppose, who does crisis put in control? Crisis means that people look for someone to come and save them, and the government loves a good crisis. But anyone else who has any final questions or comments, put them in down below and I'll throw them to the two guys here. My final one is for you all in crypto. What do you see coming for the crypto space over the next few months and even out into next year if you want? Just your general outlook.
Yeah, so with everything going on right now, it's kind of hard to plan a year down the line, right? I'm just taking things day by day and really just watching how things are evolving. Like today, for example, Jerome came out, he said a few things that's impacted the market. He did 25 basis point. Markets adjust on all this constantly. So I'm really just watching the markets, but I think Bitcoin's very much looking to get to around about 35K. I think we've got a CME gap at 35K. I think we've got a head and shoulders, an inverse head and shoulders that has a target at 35K. I think there's a number of reasons. We've also got a fib level there, technically, to expect Bitcoin to get to 35K. What altcoins do? Well, I think they're going to follow. So I have an actual pretty positive outlook on the crypto space over the next 3 months, despite everything going on. I actually think the first time for me in nearly a year putting money back in the markets was in January. And that was based on what the Fed are doing, potentially coming to an end. Markets will front run that. And I think they've got the validation of that thus far. Certainly, if you look at the 2-year yields and a number of other markets that track interest rates, you'll essentially see rates and the Fed's kind of attack on liquidity coming to an end. I think markets are going to do well. However, we've got what we spoke about, which is maybe a real uncontrolled banking crisis taking place to come at some point down the line. Now, that could come in the next 12 months. It could come in the next 6. It could come in the next 2 years. There was a very interesting, and this is a really good point for me to bring up. In 1931 and 1969, we had similar years to 2022 in terms of what the bond market did in terms of losing value in the stock market. It's very uncommon that the bond market and the stock market go down at the same time. And the only real years where it's done that is 1931 and 1969 and 2022, right? Stay with me here, guys. I promise it's going to be worth it. 2 years after those years, so 1931 and 1969, you had the monetary system change as we know it. We had it going from gold, where they confiscated everyone's gold in the FDC shock in 1933. And then we had the Nixon shock, which is where they just went onto a paper money. We've got a similar setup. The question is where are we going to be in 24 months? And to me, it seems pretty likely that we're going to have a total change in the monetary system. So it's very hard to sort of plan that far down the line. And what is crypto even going to be valued in 24 months' time? But I think crypto is on an amazing trajectory. I think the next 3 months are going to be bullish. And ultimately, blockchain's here to stay, and it's here to take over the world and it infect every single aspect of our lives. And if that's not bullish, I don't know what is.
Hell yeah. I'll go for that. I'll sign up to all that. But you're right. They haven't changed things in a while. And the gold standard removal, which I think was something in 71, was it?
1971. So that was 2 years after 1969, which is
that was to fix everything that was broken before, basically to get more money because they were limited. And now they're at a point where do we go from here? And honestly, I can't see where they're going to go or what's going to happen. So it's going to be really interesting. And it's got to be something in what you said. Maybe it's crypto, a total pivot. And I'm really looking forward to it. You know, it sounds all doom and gloom and crisis and financial and meltdown and everything broken. But I think it'll be fine.
There's two things you can do in a crisis, right? You can either panic or you can get on with it.
Yeah.
And the winners and losers are going to be picked by that exactly. You know, you either get on with it and make the best out of it, or you panic and lose your mind over it. Everyone listening to this needs to get on with it, you know, because there's nothing really you can do about it. And that's, I think, a good way to view life. You know, every challenge that's thrown at you is just an obstacle to overcome. And I think we're all very lucky to be in a space that's so early and has a long sort of, hopefully, healthy life ahead of it.
There's just one thing I wanted to finish up on that and what you guys think. So we're going through this massive crisis, right? Bitcoin's above 20,000. Cardano is above 30 cents. Honestly, my bottoms for them and what I thought the bear market was going to be was a lot lower than what has actually transpired. You know, and I'm a bit amazed at how strong they are. And everybody says, "Oh, Cardano's crap, blah blah. It's down from here to there." That's standard. That's normal. And you know, and eventually in the future that should stabilize more. But that's just the way things are at the minute. But I'm amazed, you know, and I don't know what you guys think. And I was just curious. It just came to my mind there about 5-10 minutes ago that when I was looking at prices of other stocks, I feel as if it's quite strong.
It's interesting, isn't it? I think actually I had lower prices for Cardano as well, and lower prices for Bitcoin. You know, I was very much in the 12K camp for a while there, and then all of a sudden, again, this is an ever-changing landscape. it's interesting because, yeah, I think that really with crypto, and this is a really important to make. You mentioned people say Cardano's rubbish because of the price, right? I can tell you right now that the price of Cardano has nothing to do with the fundamentals. What's actually being built? Did we just hit, I think it was 4 million wallets today, or was that yesterday?
Yeah.
If you look at wallets and growth for Cardano, it's just gone up and to the right, right? The price hasn't correlated with that whatsoever. All price is people buying and selling. You have more sellers than buyers, the price goes down. You have more buyers than sellers, the price goes up. So the fundamentals right now aren't represented. And this is the exciting thing with crypto, right? It's still speculative. It gets to a point where it becomes adopted and used, and that's what we weigh the value upon. Right now, it's just speculative largely. We're moving from that age of speculation to that age of adoption, to that age of usage. And I'm a big believer in things like Metcalfe's law. The valuable cryptos are going to be the ones that get the most adoption. Yeah. And I think Cardano is doing a fantastic job of that right now. Sorry to interrupt you there, Paul. I know we're both sort of jumping for the mic there.
No, that's fine. I like to be more a spectator in these weddings than I chose, so I can learn as well. But yeah, I agree. Fundamentals don't play a lot in the price of, I'd say, crypto in general yet. In time, hopefully we get to the point where it is. And we talked about price a bit early on and that, but I would say once we do get to the stage where fundamentals play a bigger role in the price, there won't be as many opportunities for making financial gains on it. Yes, there will be potential there, but not some of the insane returns we see happening in crypto now. When fundamentals are actually taken more in line, there won't be as many, I suppose, outside shots as you see in the market now. But I think we'll wrap it up there after this conversation. I definitely think we need to do this again in another 100%. Few weeks. If you're up for it all in crypto, you're very welcome back anytime.
Yeah, whenever. Do you know what? It's been a pleasure. It's nice to meet you both sort of in person. I know we're only a short swim away from each other. I did say it'd be funny having two Irishmen and one Englishman on a show together. There's a joke that starts like that somewhere, I'm sure. But yeah, no, honestly, lovely to meet you. I'm a big fan of what both of you are doing. I think this is great. And we'll come on whenever you guys want me.
Awesome.
Yeah, cheers, man. We should try. Is there a Scotsman we could try and get on as well to fill it out?
Well, I'm actually currently in Scotland, so I could probably see if I could pull someone in off the street to sit with me.
Yeah, we could get some of them jokes going then about walking into a bar. Yeah. Move for the next night. Actually, one final thing, for the Cardano side that's still here. Do I have it? The summit was announced today, the Cardano summit, for people that are waiting for that. The summit this year is going to be in Dubai. That'll be the main event from the 2nd to the 4th of November. And then there'll be all the virtual summits like the other years as well. I'd love to get out there. I'm not fully sure yet if I'll be able to make it out to Dubai. Markets will probably definitely play a role in that, whether I can justify going out as far as Dubai, but we'll see as the next few months roll on. Paddy, AllinCrypto, appreciate you guys stopping by. Grounded Crypto, great to see you got on the live stream today for, I think usually you get in and watch the replay, but thanks for tuning in, everybody. There was lots of people there commenting the whole way through. I do appreciate it. The more people that get involved, it's great for us to have questions that people want answered rather than us just asking and answering our own. Thanks, guys. And I'll talk to you soon.
Bye-bye.
Thank you.